Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our weekly wrap. Another massive week in all that is trending in lending. So a couple of relevant points we thought we'd touch base on. Assessment rates. Want to talk a little bit about that? What about me just giving it over to Loz?
There we go, that was quick, wow.
Caught you off guard there. You're allowed to talk. Go.
Something I prepared earlier. So we talked last week around the changes that APRA made to the assessment buffer rate, which was previously APRA mandated it needed to be at least 2.5%, and they were taking that up to 3%, and that was going to kick off from the 1st of November. So we've seen two of our major banks come out and announce their position on that, I suppose, this week. Both have said yes, as of course APRA have said. The assessment buffer's gone up from 2.5 to 3. However, because their floor rate, so the baseline that they won't go under, is already about 5.5 or 5.3%, there's actually not been any change to their serviceability, I suppose, to a degree, because the floor rate was already above that lower rate that APRA originally had allowed them to use. So the banks have already shown, I suppose, some responsible lending in that they've been probably anticipating something like this. So that's two that have come out, so we'll watch the space on the rest.
Yeah, so rates were already so low. Banks were already servicing at that level anyway, or well above. Yeah, so it's just interesting, like it was this big, what's this going to mean? Now suddenly, well, most of the banks, it turns out, were probably already there anyway.
Yeah.
So,
and I think they're maybe trying to roll this out gently, so making some sort of not so rash moves at the moment. There's discussion that there will be more coming, and that will obviously change things even more. But to make a huge rash move would have obviously been pretty full on. So it was probably the kinder. It was.
Yeah, good
We're
news.
the good news brokers.
The good news brokers, correct. That is us. The other one, we saw some fixed rate movements this week. So just an FYI, two banks, and no doubt this starts the trend and it will follow, but two banks have moved fixed rates anywhere between sort of 10 basis points. One was as high as nearly 20, I think it was a 20 basis point on two products we saw in there. So just, again, thoughts around fixed rates at the moment. If you had been thinking about doing that with your existing lending, absolutely get in touch. Let's have a chat. Let's look at where those rates sit today. We always have these conversations with clients. They go, we're just going to hold off to see if it goes lower, or could it go any lower? The reality is the market's going to do what the market's going to do, and they've been incredibly low for a long period of time. And so when they just start to squeeze that little bit of margin in, I'm sure the banks on their down to their last $10 at the moment are struggling.
Doing it tough.
But we have started to see that increase. So mindful it might be a better time now, because at 2%, 1.99, 2.19, 2.2, anywhere in there, that's incredibly cheap. So might be the time, instead of sort of waiting maybe to go, the what ifs of the market. If we see this little trend, hopefully it won't flow on too heavy, but now's the time to go, good time to review that with your existing lending. But B, what we've been speaking about in the previous weeks is about the rate lock that we talked about. So if you have an application in motion, you do have an ability to pay a rate lock fee with the majority of lenders that will allow you to lock in that interest rate for up to 90 days. So if obviously if you were working with us, you'd already know that. We would have had that discussion. You more than likely would have taken advantage of that. But if you're not, and you know anyone or yourself, family, are going through that exercise, definitely maybe get on the phone and understand that better, so that you don't risk catching these interest rate rises. And I think this week we'll see, because it's not not common for just two banks. It's not how it works. So and mind you, we got the email at 6:30 a.m. on Friday morning saying as of today. So gone other days. We'll give you a month to work this out. It doesn't work like that anymore. So a little bit challenging, thankfully, in our process. Rate lock and talking about that is really important at the time of application. And this is just a great example why.
Absolutely.
It's a heap of our clients that did not have their rates go up, which is exciting. We're talking about some valuations, but again, in a market that is just firing on all cylinders across Queensland, and we are seeing some, I guess, inconsistency in valuations can be a real challenge. So probably the two that stand out the most, one is we've seen a couple of short valuations on purchases at an auction. Again, I get it's very hard. There's 4
Yeah.
or 5 bidders,
Yeah.
you know, there's 1 buyer, there's 4 other people that would have paid the same money, you know, or that were within a range of 5% of that value. But a valuer, you know, has to go through a formula to work out what the value of that property is on behalf of the bank. And in some of these cases, that auction, has sort of pushed that up potentially. And they're struggling to maybe find some recent and comparable sales, I guess. That might be the purpose behind where there is a bit of inconsistency in that. So with auctions in particular, we always talk to clients about just making sure that do whatever research possible before that. Have a look at some recent and comparable data. We do property profile reports for our clients.
Yeah.
If you work with us, that's what happens. So, you know, going through that, educating you a little bit in the market so that you maybe not caught out like that on the day, and you sort of know where you think it should sit. But also talking through just having a buffer. Yeah,
Absolutely.
knowing that if you know, if it did go to this, you know, are we in a position to cover a shortfall? Is there an ability to do that? So just in a rising market.
Yeah.
Frustrating, especially like I said, there's 4 other people in the room that were bidding at a similar level and prepared to pay the money. That one valuer, nothing against valuers, we have great relationships with valuers, they have a job to do, but just be mindful of that, and it is starting to have that conversation with your broker and with the real estate agent, and gathering as much information as you can in the lead up to that day, so that you can
as informed as possible.
Yeah, so that you can bid confidently. And also probably the other one is from a construction point of view. The cost of building a home has increased. And so the cost to build is the cost to build. But sometimes when they're working a formula on a construction valuation, which is based upon, you know, the land and the improvements, so as if complete, meaning they've taken the land, the build contract, plans, specs, when this property is complete and built, what would it be worth? And with the increases in steel and timber and all those things, it is getting harder and harder for a valuer, and we feel for them in that exercise, to be able to justify that cost once that property is built, sitting in that street. If it had to be sold in a short time, you know, the formula they use, is it worth that, right? And you know, we're seeing 8-15% increases in some cases on the cost of building that. So when it's sitting in the market compared to something from 6 months ago, well, that price of build might not be relevant.
Correct.
So
it's not always reflected in.
There's some frustrations in trying to understand the process and explain that better, and we spend a lot of time talking with clients about that process. And if you sort of are concerned or want to learn a little bit about how the valuation works, or what formula they use, or what's the methodology they would use on a residential short form valuation, etc. Reach out. You know, that's what we're here to do. It's very topical and very relevant. And you might go, I was about to say a swear word then. You might say, bugger, that is happening to me, or I know of someone going through this. Get in touch and we can help talk them through that.
And all those 3 things, you know, we've talked about the changes with APRO, we've talked about rate lock and interest rate changes around valuations and what to do in those situations, auctions and constructions. Those are all or conversations that we're having with clients. Those are conversations you're not going to get if you're pumping your home loan into an online loan borrowing calculator. It's not going to happen. You're not going to have someone that's experienced to sit and have those type of quality conversations with you. And each of those conversations can be 30, 40, 45-minute, an hour conversations that we're having, but it's around making sure that you're in the very best possible position, you get the best outcome. So just bearing in mind, if you're looking at, hey, I can jump online and I can just pump this through online, what do you want, I suppose, through that process, and what experience do you have, and do you want to have professionals that are there to support you?
Why use us? Why work with a broker versus online? These are the sorts of things that are relevant, and it's our job.
Some great examples there.
It's our job to know these things. So, but look, as always, any questions, reach out. This and more to come, and enjoy the weekend in the meantime.
It's all from the Good News Brokers.
The Good News Brokers. Talk soon. Bye.
Bye.